Hello everyone, this is Nick Perry of Schaeffer's Investment Research with your chart slideshow for Wednesday, November 1st. Today I am back with my weekly check of the broad market indices. In last week's chart slideshow, we were looking at these charts ahead of the FOMC meeting, and the takeaways were basically that the uptrends were still intact. The SPX was in that stair-step pattern that we talked about where it just kind of bounces and bounces and bounces and bounces along, and that was sort of seen in the other indices. One of the things that I did add to the chart was a red line that you can kind of see here. That was off the April highs on the comp, and I said that I expected that might offer a little bit of resistance, but wouldn't consider that enough to derail the uptrend. So let's go ahead and turn to this week's charts. Here we see that for the most part the uptrends continue to be intact. As far as the comp, that red line we were just talking about, you can see it right here. The comp did push up into it, flirted with that as the headlines were talking about the new highs that the comp recently hit, but the comp hasn't really been able to sort of push above that. It's more or less just consolidating right below it. In terms of the SPX, we see that this overall bouncing pattern is still intact. We're currently right now, if you look at the most recent action, we've got a little bit of a consolidation here. The SPX popped and now it's kind of pulled back. In the last couple of days it's just been consolidating. That fits with the recent pattern we've seen. Last week I talked about the indices being overextended. Actually, I've talked about that theme for a couple of weeks now and noted that it hasn't really hampered the uptrends. So far there's nothing really that shows any different on that. We haven't had much in the way of a major pullback recently, and as you can see there is still a bit of room down here before we hit the that former resistance that should now hold a support. We've also got the 50-day moving average, which continues its creep higher, and that's just now pushing above that zone. So when you look back, we've got this area right around here, just above 1320, is a couple of layers of support there. So if we do see some kind of pullback, that's an area to keep in mind. In last week's chart slideshow, I also talked about the sort of lack of leadership in terms of we don't have much in the way of bellwether stocks that are really driving the action. And when you look at these charts, we've now had a good deal of earnings reports come through, and we don't see much in the way of major volatility. So I still think that continues to be true. I mentioned that it's been more of a sort of creep in by buyers where they just sort of step in. Earlier today I noted a Wall Street Journal article that I was quoted in when I was talking to the reporter about that yesterday. We were talking about yesterday's action, and we saw the market kind of open on a weaker note when we had the Chicago PMI and the consumer confidence numbers come in, and sort of led to some softening in the early action. At the end of the day, rolled around and we saw buyers kind of step in and pop the market back up, and that just continues to be the case over the last few months. We've seen this, any sort of weakness, we get buyers coming in. So as far as the support levels, we're overextended from them, but as long as the buyers keep coming in, we're not going to see that sort of major pullback to there. So it's just a question of how much buying power is out there still and when they're going to keep coming in. For now, the charts don't seem to suggest a break in the uptrend, but as always, it's something to keep an eye on. So stay tuned to the blog for further updates.